Hi guys, welcome to this next episode of Ashley's Digital China. Today I am bringing you another phenomenal guest. We are with Alice Han today. Alice is a prominent expert in Chinese macroeconomics and geopolitics and a global fintech. Currently, she's serving as the director of Green Mantle, a financial advisory firm with degrees from both Harvard and Stanford. Alice's research has been published by top academic institutions, including Tsinghua University, the Hoover Institution, and major media outlets such as Financial Times, Wall Street Journal, and many others. Alice, welcome on the show.
Thanks so much for having me, Ashley. I'm looking forward to it.
I'm very excited to speak with you today because we are all living in the era of Trump tariffs. And today, we are going to talk exactly about that, the tariffs, the global implications of those tariffs, the China's response, and probably the overall shifting global order. So the first question right away, what are tariffs?
Well, I think there's a common misconception about tariffs, and that's certainly played out politically within the US when people are confused about who pays, quote unquote, for the tariff. But effectively, the way to think about it from an economic standpoint is that it is a tax on consumption, on the imported goods that effectively the consumers in an importing country have to bear. And in the case of the US, putting tariffs on Chinese goods effectively means that there will be a markup in prices that are coming into the US that are imported from China. And even if the consumers do not see a significant markup because there isn't a markup from the, say, suppliers or the middlemen in the US, this creates a degree of uncertainty, which again has macro effects beyond just the tariff cost itself. So really think of it as a tax burden that the consumers have to bear, and in this case, it's the US consumers.
And could you briefly also explain the key features of this new 2025 tariff? Because we all remember how a few months ago, we woke up one morning and suddenly there was this universal tariff, and then there was a change in mood, but the escalation continued with China. So we are right now at the end of April, and we know that everything can change. But where are we right now, and what are some of the key features? How are they different from the previous rounds of, let's say, tariffs imposed during Trump's administration or other administrations?
Well, that's a great question, Ashley. And, we currently, and again, when we publish this, things may change because the Trump administration is quite stochastic and unpredictable. But certainly, as we currently stand, I think we are at a standstill in tariffs, meaning that both sides do not see an incentive to continue to escalate the tariff response in the trade war. But generally speaking, I think what is a useful heuristic is to think about how this set of tariffs is different from Trade War I, or even U.S. tariffs against other countries, including the EU in the first Trump administration, if you recall, in the sense that certainly Trump feels further empowered to use his executive authority and basically call on IEPA, Emergency Powers Act, capabilities to basically launch these tariffs without congressional approval on a host of countries. And certainly looking back as historians, we'll see Liberation Day as liquidation day, or liberating people from their money, because it was some of the biggest stock market plunges that we've seen in recent years. And certainly more significantly created a huge rout in the bond market, where yields, especially in the long end, were pushed up extremely high, in a sign that investors domestically and globally were losing their confidence in the US as a safe haven destination, and even the US dollar for that matter. But I think, again, if we compare this to the first Trump administration, what is clear is two things. Number one is that the Trump administration and the MAGA base really believe that tariffs are required to reindustrialize the US and make sure that the US is back on a fairer ground when it comes to trade relationships, not just with China, but with the rest of the world. So there was a strain in MAGA, and you go back to even the Tea Party, which was the precursor to it, that felt like America lost out to globalization. Globalization, which promised you reducing tariffs, further freer trade liberalization, basically screwed middle America and especially the blue-collar industrial bases of America. So Trump is trying to redress that domestic imbalance that's been created by globalization. Number two is, I think, a very unpredictable structure of power in the sense that Trump, who is at the apex, is clearly in the camp of Navarro and others who are going for tariffs as the blunt instrument to redress these imbalances. Now, we can debate whether or not this is an effective method, but it's clear to my mind as a historian that we're seeing the highest tariffs that we've seen since Smoot-Hawley, since the 1930s, and in some instances even higher for certain goods. So it is a regime shift that takes America back to its protectionist roots, so to speak. It's certainly not aberrant if you look at the longer duration of American history, but it means that effectively America, being a champion post-Bretton Woods and post-World War II of the liberal trade international order, is at a standstill, and maybe even a pause during these Trump years. But again, for foreign investors, for the global community writ large, this is a significant shift, and I don't think that should be understated.
Absolutely. And how do you see these tariffs reshaping global trade flows? We are likely going to see more, for example, regional blocs forming, or will global supply chains adopt in some unprecedented ways? We've already seen interesting responses, and things have started moving ahead. But what is your take?
I think what's been interesting to me is that both sides, Washington and Beijing, are trying to weaponize and take advantage of the situation in building these informal coalitions against each other. And this is, we can talk into this later on, a part of I think, a general structural shift in the relationship towards decoupling, and you can call it Cold War II. The problem is that these other, I would call, non-aligned or rest of the world countries, including EU, which is the biggest market, do not want to have to choose sides. They benefit from hedging. And what I think we'll end up seeing is a China plus one and a US plus one strategy, meaning that just as Apple is going to increase its production capabilities in India to offset any further risks to a China strategy for its foreign exports of Apple products. Other countries, and I specifically think about the EU when it comes to defense equipment, will try to look domestically to their own production within the EU, or other countries like Korea or Canada to again diversify and reduce supply chain risk. I think the watchword of this decade is supply chain resilience, and countries around the world are going to have a China plus one and a US plus one strategy, because it's clear now that trade is a national security issue, whereas I think in previous decades, trade was seen as an inherent good towards reducing costs for consumers and increasing welfare.
This is a very interesting way to look into it, because a lot of people are seeing the China plus one. And actually, for years, it has been encouraged, right, to look beyond China and de-risk, so to say. But de-risking from the US is something new on the agenda of a lot of countries, but it's happening very, very fast. What about the impact on businesses? What industries or sectors, in your view, both in the US and globally, will actually be impacted most by these tariffs and also by the shifting dynamics? Could this be a tipping point for companies diversifying completely away from China? For example, we spoke about, Tesla, Apple, right? Apple is struggling to have its position in China because some of their AI features are not fully integrated or affected. And today, the Chinese consumer sentiment is also not particularly high. And if Apple iPhones are going to be even more expensive, it's going to be, again, harder for Apple or Teslas or, other companies to stay competitive, but not only because of that, because the Chinese competitors in the market are so strong, right? So you need to put so much effort to probably get a lot less versus what you have achieved in that market before. So a lot of things are shifting, both in the US, in China, and globally. And what industries and sectors do you think will be most affected, and how?
Well, this is a great question again. And I recalled Trade War One, which I covered very closely in the first Trump administration. Unlike Trade War One, because we are targeting potentially a host of countries with these reciprocal tariffs after this pause that's been put into place, basically, I think everyone will be affected. Anyone who has intermediate goods that they import from any other country is going to have to factor in some kind of a tariff risk. It was interesting. I was in China 2 weeks ago after we saw each other in Hong Kong. And on CCTV, there was Milton Friedman talking about the pencil in the 80s. So he has this speech where he talks about the pencil being produced in all different parts of the world you wouldn't have imagined, because no one country can produce it. We're at this point where for most goods in the world, we need to have intermediate good imports. And it's going to be very hard for certain countries to ramp up their own domestic autarkic production. So I think it affects everyone. Now, so certain people will be affected more in the case of the US SMEs in particular that are reliant on China and other ASEAN potentially countries for imports of intermediate goods will be affected. But also, let's be honest, the agricultural sector and energy sector in the US that obviously will confront these Chinese tariffs. But I think for them, because of the way that the supply chains work, for the agriculture and energy sector, it'll be somewhat easier, I would say, compared to the manufacturers to find alternative markets to soak up demand because it's relatively substitutable. But again, I think we're in a place where everyone will be affected and they will have to factor in tariff risk, especially if Trump continues to deliver not only on the high tariffs on China, but also tariffs on other countries. And I will end by saying the issue with the tariffs on China that the rest of the world needs to confront, because they don't get a free pass, is that China will have to find alternative markets. EU is going to be one developed one that they will seek, but certainly other countries, say in Latin America and the global south, will need to figure out a way, Chinese government officials, to basically soak up Chinese goods demand in other markets aside from the US if tariffs remain in place. So this is a global problem, not just a China-US problem.
Yeah, no, absolutely. And beyond just the trade problem, there's also the American relationship with, let's say, broader allies, particularly with those that are very much connected and intertwined with China economically. You've mentioned the EU, you've mentioned, or we can talk about Canada and Australia and other countries that for many years were US's closest allies, including Japan, including Korea. And right now, as you said, they don't necessarily want to join any of the two camps. But do you think they will be given a chance to actually stay more neutral? Will they have to form their own coalition, or will they be allowed to play the game in both courtyards?
I think if Trump were a more disciplined strategist, and I think he has some merits to the way that he, quote unquote, bullies countries into giving him a fairer trade deal. If he were more disciplined, he would find an opportunity to create an anti-China coalition, leveraging what the Biden administration was trying to do. The problem is that Trump sees things in very transactional ways, and I don't think has the capacity to see the broader strategy, which others say, Scott Bessent, his Treasury Secretary, or Marco Rubio, his Secretary of State, see. So I do not think for that reason alone that countries, whether it's the EU countries, Japan or Korea, even Australia, where I'm from, traditional allies of the US will see it in their incentive to create an anti-China coalition and balance with the US against China. I think we see a bigger non-aligned movement of countries that hedge, including traditional US allies, because the Trump policy is so unpredictable. And I think China has made the most of this versus Trade War I in terms of framing itself as a defender of the liberal international order and free trade. Now, whether or not that's true remains to be seen, but certainly they have taken more advantage of it this time around than Trade War I. And there could be interesting developments where you see further reductions in tariff and non-tariff barriers in ASEAN, with other trading partners, including the EU, notably EU-China Summit 50-year anniversary is happening in Beijing now, not Brussels, at the end of July, in a bid to, again, move closer to Xi potentially. But both sides, China and the EU, are trying to show the US that they have alternatives. So I think, long story short, Ashley, countries outside of the US that are traditional allies will probably see it in their best interest to continue to hedge. I will note, lastly, that it's interesting what's happening in South Korea. The front runner of the Democratic Party, Lee, is probably going to be more of a hedger rather than an anti-China hawk. And certainly in the case of Japan, we saw a statement recently saying that they would be against an anti-China coalition led by the US. So again, because the Trump administration, the structure of power is very much Trump dominated, and Trump's word is the last word, I just do not think he has the strategic discipline to rally other countries to block against China.
And that is a beautiful entry into the next question of, China's response. So this time they actually chose to respond. And as you said, they are seen by many, especially in the global south, as the defender of order and also somebody with common sense. Just yesterday, we've heard one of top politicians in China saying that we are open to talk. and our door is wide open, but you need to also give basic respect and stop bullying people around. And a lot of people suddenly have that newly found respect, and I would say a lot of memes, right? So there used to be a trade war, there used to be a cold war. Right now, it's a meme war, where we see all sorts of things shared around the world. And this support for China's response, I think, is maybe at its peak over the past 10 years. And also internally inside the country, I think a lot of Chinese feel really proud with the way China is playing an adult in this whole situation, and they're quite frankly enjoying it. Besides the fact that, of course, a lot of companies are struggling, manufacturers are struggling. Earlier today, I'm a member of a group of companies that basically trying to find their new normal in this whole tariff situation. And many of them, Chinese manufacturers, are saying, hey, we looked at Cambodia, going to be difficult. We looked at Vietnam, we are likely going to go to India. So Chinese manufacturers going to India to also diversify and, find new routes. So everything is very, very unique, but China is kind of playing a more active role. So what do you think is this going to mean for China's place in the shifting global order? Is this situation, and that's what a lot of China watchers see and maybe follow, is this going to accelerate China's rise onto international arena? Or is it going to potentially expose some of its limitations that we also know exist?
I think it remains to be seen. History can move in very unpredictable ways. I will say two things. Number one, there's a domestic structural challenge for the economy. You, having lived in China, have witnessed the slowdown over the last decade, and that China confronts its own structural challenges, whether it's ever-increasing debt burdens, mainly in the local government debt balance sheet, for instance, the demographic challenge, and China's, I would say, mainly thwarted efforts to rebalance the economy away from its traditional fixed asset investment-led growth. I think that what could be the upside scenario for China domestically is going to be that this trade war expedites China's rebalancing efforts. We've heard rebalancing as a theme, I really think, since Jiang Zemin. It's been a theme that has reoccurred, but when push comes to shove, whether it was the global financial crisis, whether it was the first trade war, whether it was COVID, that rebalancing effort went to the back burner because ultimately they needed to boost growth. I think we are seeing more structural impetuses within China to push towards an expedited move to rebalancing, a consumption-led growth. Because I think there has been a degree of self-reflection by the Chinese officials in Beijing, whereby they understand that Chinese overcapacity, if left to continue to rise, and it has risen since Trade War I, it's worth mentioning, will create not just economic problems for China, but geopolitical problems. And we've again seen that in backlash in recent years, even when it comes to, I would say, somewhat strategic allies or partners like Brazil against Chinese steel, or even potentially against Chinese EVs in the future. And certainly has been the case of the EU-China relationship getting even more difficult in recent years. So that's the economic side of it in terms of the opportunities that I think will arise in China. In terms of the geopolitical international standing of China, I'm a little bit skeptical. I think China has its own domestic issues to deal with right now. And it's watched enough of U.S. history to see the incommensurate burdens and responsibilities assigned to the hegemon, and ultimately doesn't want to be the hegemon in the global international order, or even the global policeman for that matter, when it comes to security issues. It certainly wants to have a degree of influence globally on trade, and even to some extent on geopolitics and certainly technology. And I would say wants to be primus inter pares, first among equals, or even potentially hegemon in the Asia-Pacific region for, again, strategic geopolitical reasons. So I don't think that China comes out of this necessarily as being the replacement of the US or even stronger geopolitically. But I do think it creates opportunities for China to, I think, correct the narrative that it is that people in the West or even critics have assigned to China as being this a monolithic, autocratic, authoritarian regime. And again, maybe shifts it towards a country that other countries can potentially do deals with and reduce trade barriers with. I think what will be interesting in the next few years, it's already being flagged by the State Council is a further reduction in foreign investment restrictions. And I think that that will certainly favor certain countries like the EU countries. But I certainly see it, I think, in a strange way that Trump is the push for China to liberalize the economy further. I wouldn't say exponentially and expeditiously overnight, but certainly it expedites that process and expedites the process of rebalancing. I will end on one note, which is going to be more controversial, and it is the Ukraine issue, and to some extent the Iran issue, is that it's going to be very hard for China for, again, strategic reasons, to shake off the yoke of its partnerships with countries that are quote unquote considered by the West as axis of evil, or axis rather of ill will. Sorry, not axis of evil. And that is going to be hard for China, again, to raise its standing, especially when it comes to traditional American allies, Japan, South Korea, especially the EU. So it remains to be seen. But I'm a little bit more bullish versus Trade War One that China is doing the right things to raise at least the international sympathy for China. Remember, after COVID, if you look at the Pew surveys of global surveys of China approval rating, it took a massive hit, in some countries even halving. I think with the Trump mayhem, we could see approval ratings rise, actually.
Yeah, it's a very interesting and complex development. And China felt that there was obviously historically 100 or 200 years of humiliation, so to say, but also very often inside the country, you could hear that people say, we are tired of China bashing, just like with the COVID. That, as you said, approval ratings around the world, and many of them, I think in some countries in particular, across Europe, in some Southeast Asian countries, dropped significantly. And people said, why? We tried to be, fast. We tried to, supply the world with all. Why are we being bashed so hard? It is something that's supposed to unite us, and we need to come together. So this is indeed, for a lot of people inside the country, a very stressful time, and they want to see the light at the end of the tunnel. And this opportunity with the tariffs and with the administration that currently shapes policies is a little bit of a kind of a breath of fresh air, where China says, hey, we can actually a little bit reframe how the world sees us in some context. And we're going to talk about technology. That is very interesting, because you've mentioned the decoupling, and that China wants to dominate that part, whether or not they want to become the world policeman. They want to be in the room, right? They want to be an important player. They want to be the leader here in Asia Pacific. But when it comes to technology, for China, it is non-negotiable, right? They do want to dominate the world when it comes to AI, when it comes to robotics, when it comes to humanoid robot technology, when it comes to space, maybe not dominate yet, but they definitely want to be one of the two basically top countries going and exploring space. When it comes to mad tech, so whatever technology you see, you touch, you think of, China wants to not just be one off, they want to lead, because this is part of their national strategy. But before we talk about technology, I just wanted to ask a question in regards to collaboration and strategic collaboration with all these allies. EU, for instance, they used to adopt that strategy with China, which was, we collaborate on trade and growth, but also we strategically compete, right? So there's collaboration and competition, exactly in that order. And then over the past couple of years, it kind of flipped. It was, okay, we're competing. We really need to protect ourselves because they're coming to get us. And collaboration kind of took second stage. Do you think, given what's happening right now, some of these priorities will again shift into collaboration first and competition second, or not?
I think tentatively it will move more towards guarded collaboration. And I would say that as a spectrum, if you think about a spectrum encompassing collaboration and competition, for two reasons. Number one, Brussels is not going to fight a trade war on two fronts. It has paused its investigations into Chinese anti-dumping of certain goods like chemicals. And China has done the same with cognac. It's paused some of its investigation probes into EU goods. Brussels and Beijing are trying to find ways to reduce the trade tensions in the, I think, short run. And this lasts as long as they feel like Trump is a mutual threat. Again, as part of the two of them choosing to balance against the US for their own domestic reasons. That being said, I am somewhat more bullish that there could be certain deals to strike, mainly because I think China is more willing to compromise than it was in previous years. I think that they've gotten the memo that, again, to your point, Chinese goods being in this sort of free trade framework, because they're so much cheaper, if they flood other markets, other countries are going to be very upset. So the Chinese, I think, inherently understand this now. We know when I talk to government officials in China this year versus in previous years, they've really switched, I think, the narrative from in previous years, well, this is just the free trade system that we inherited and we are abiding by the free trade system. Our goods are just cheaper and better, to now actually we should address some of these overcapacity issues. So I think there could be certain deals to strike on the margin when it comes to price minimums for EVs, when it comes to even technology transfers, if China increases greenfield investment capabilities of, say, EVs and batteries in the EU. So this could offer, I think, distinct opportunities for the EU and China. But I'm very clear-eyed to the fact that collaboration will probably only be isolated to certain areas that are seen as mutually beneficial. But I do not think it will be complete collaboration when it comes to technology, and certainly not when it comes to national security, because the EU is still very worried about China's potential role or even its influence in the Russia-Ukraine conflict.
Absolutely. So now let's look at technology a bit closer. So this ongoing technological decoupling between China and the US has been a center theme of the trade war in the previous years before the tariffs hit us all. So how will this accelerate now, when we know there is very unlikely going to be this joint vision for the future? Because China has, at least what we hear at home, right? China has made several attempts, for example, coming and speaking with the Biden administration and even with the Trump administration, saying, hey, we have AI getting out of hand. It's developing very fast by commercially driven entities, and we need to jointly secure and develop guidelines and rules so that AI is basically going to help us rather than destroy us. The US so far officially has not commented or joined forces with China on that. When it comes to robotics, so already today China has 51% of the robot industrial capacities installed, even though it does not yet have the kind of B2B manufacturing robot champion yet. The most successful company that China has been bought by Chinese from Germany. But when it comes to humanoid robots, right, companies like Unitree or even XPeng are making quite interesting advancements. When it comes to semiconductors, when it comes to med tech, space tech, new materials, you name it. So China is really, really focused on racing to the end of that technological edge when there's no one behind them. There's no close second. And what is this technology decoupling mean for the rest of the world and generally for us as humans? Because it can be actually a very dangerous thing when we create technology at such a pace, which could be potentially so impactful and dangerous and exciting at the same time. And when we are not collaborating, not talking, not regulating it together.
Yeah, it's been a theme of the last decade, this move towards technological decoupling, and you can call it the splinter net as one instantiation of that. I remember when we were covering Trade War One, I was telling my clients and in a deck form that in the early days of the trade war, you shouldn't forget that this is going to be a tech war. I remember writing this in probably 2018 before we saw the Huawei ZTE debacle, because it was clear to me that the deep state in America, and it's not just the case in America, you see it elsewhere, was very worried about China's increasing technological dominance and the implications for the US, not just economy, but national security. And we did see that the Trump administration was actually quite disciplined about the way that it did these tech export controls, mainly trying to kneecap Chinese semiconductor imports, which again have downstream effects on even robotics and certainly AI capabilities. It's interesting that Jensen Huang is now in China and Beijing meeting with officials, because NVIDIA played a huge role in this. In order to abide by the Biden administration continuation of export restrictions on semiconductors, they designed the H20s, which have now since been banned by the Trump administration. I think China, when you get, again, compared to Trade War One, is in a slightly stronger position because it's taken the last 8 years to really try to build up capabilities in-house. Again, it's not going to be as leading edge as the Taiwanese or even the Dutch and Japanese when it comes to semiconductor equipment. But certainly, I think it has what I would call good enough workarounds for it to, again, continue to grow its technological capabilities. It'll do it at a slower pace than it could have done if China had continued to import these semiconductors without restrictions. But certainly, I think China, again, has learnt the lessons of the technological war in the first Trump administration and massively ramped up investment of the chip industry, and also massively ramped up alternative workarounds when it comes to, say, NVIDIA H20s, which they've been stockpiling. And again, as we heard, was critical for the DeepSeek model itself. So I think China's taken the lessons, but again, it will have an impact, a material impact on China's technological capabilities. I'm more optimistic in China's tech future because I think if you look at it from a structural standpoint, it is an extremely dense, crisscrossing ecosystem in which companies like Huawei are doing multiple things, whether it comes to smartphones, EVs, robotics, chips. And the same with a host of other countries you mentioned, companies. You mentioned Unitree. It's the same for Tencent, Xpeng. So that's going to create a very dynamic, hyper-competitive ecosystem. And in a strange mirror image, China's technological companies are becoming more free market and competitive in the sense that the US was. And the US is moving somewhat in the opposite direction, where you have a monopoly or rather an oligopoly of certain companies owning most of the tech stack. So that's going to be very interesting moving forward. But certainly I'm slightly more optimistic when it comes to China's technology capabilities than other areas, say geopolitics or even the economy.
And with this technology, I think one vision of the future that many of the Chinese technologists and also maybe some government employees have is that once China has this operating system for life ready, powered by tech algorithms, powered by tech giants, powered by the Huawei, let's say 6G infrastructure, will then the rest of the world, including, let's say, Africa, Latin America, purchase the software to run their country? And that's where this national security angle comes in, right? And so far, Southeast Asia has been very careful. Obviously, India has their own challenges with the country. Africa has been rather open for the majority of time. And I think a lot of large Chinese companies, such as Huawei, right, they see that at some point, this technological advancement will translate into an operating system for life. And ultimately, smaller countries that do not have capability to develop one of their own will pretty much buy software as a service to run your whole business, your whole operation, your whole populace, so to say, from these Chinese counterparts. In your mind, does this version of reality even exist? Or is it completely impossible?
I think two things. It's already happening in many countries. I think part of the Global South strategy was to get China to build alternative markets that were fast growing demographically and economically. So the Global South is going to be critical for the future because it's unlike the northern counterparts, which are fast aging. The Global South is increasing population. Certainly, one would expect GDP per capita to rise in these countries. So there's more upside, even though the purchasing power is going to be more limited from the point of view of Chinese exporters. But certainly, I think it is entirely conceivable, and in fact, my base case, that we get a Chinese tech stack dominating the Global South. I think the Middle East will be important as part of this as well. And then the rest of the world will be a kind of U.S. technological sphere of influence. So we end up getting basically the splinternet framework, where you have a China-dominated and a U.S.-dominated technological sphere of influence. But as you rightly say, it's more nuanced than that, because at the end of the day, certain countries, India is going to be an important example of this, skeptical of China and will want to find their own domestic workarounds. And I think that this trade war will reignite the impetus domestically for a lot of countries, whether it's DMs or EMs, to find a way to produce domestic alternatives as far as possible when it comes to national security or national security adjacent goods and services. I think that that will be one of the big products of this Trump administration's trade war. So I agree with the splinternet framework, but I think we get certain goods and services, especially government-related goods and services, that, again, countries will try to do in-house, or they'll try to diversify across supply chains. So maybe they can pick up software services from Japan, for instance, or chips from Taiwan, or certain goods and services from the EU, again, to build up more supply chain resilience and diversification.
What about the soft power? Because a lot of those blocking points towards China's further rise, be it when it comes to technology or being a more multifaceted economic power, is the soft power, is the fact that a lot of countries are skeptical, is the fact that a lot of consumers are fearful is the fact that a lot of international media is often only showing one side of China, and the narrative is generally a lot more negative than it is positive or balanced. So how effective, in your view, has China's soft power tools been so far when it comes to, I don't know, the cultural diplomacy or Belt and Road? We've all seen some positive examples like the Naja movie, which was a big international flop, I would say, but a big local hit. But also we've seen games like Wukong taking on international stages. So what is your take on China's soft power tools right now? Are they effectively using it? Are they using it better now versus what happened before? And how is it going to develop in your view?
I think undeniably the Chinese have learnt some of the errors of what I would say is poor marketing for China. Wolf warrior diplomacy and COVID exacerbated this because it again created this vision in people's minds of a heartless, autocratic, monolithic regime. And I think three different things have happened in the last few years which have contributed to a more positive view of China. And I think this will continue. The first is, this is going to sound very banal, but I think it's extremely important, is the visa-free travel. Certain countries like Australia have 30-day visa-free travel. That is a big game changer because it effectively means, and as you know, we have lots of friends who are influencers in the space. It means that people who are, say, American influencers or Australian influencers who have never been to China can go there without a visa and experience China firsthand and again, transmit that image directly to their followers. That has created a host of content online, YouTube being one instance, where people are showing the real China and that it's not what people think. It's cleaner, friendlier, more technologically developed, in many ways more like East Asia, Japan, Korea than people would imagine. Number two is, and just to finish that up, I think iSpeed has been an amazing ambassador, this African-American teenager, or now young adult, who goes around China and shows what it looks like to be in an EV car, what it looks like to meet with locals in Beijing. Again, showing a human face of China. The second, I think, major change has been the decision not to continue wolf warrior diplomacy. I think what was really interesting in Trade War I was that China, in defense of itself, decided it needed to pick a fight with other countries and show that it was tough. And one example, good example, is my own country, Australia, where they launched in response a multiple-year trade war in the form of a trade embargo on Australian goods. And this was again in response to some of the Huawei restrictions that the Australian Morrison government had put into place. So that decision not to continue that, but do a more nuanced, I think, diplomacy whereby you act tough on the US on certain issues, whether it's tariffs, you leave the door open to negotiations, but at the same time, you try to have increased discussions with other countries, EU, East Asian countries, to show them that you want to reduce trade barriers and restrictions, whereas the US is going in the opposite direction. I think that has been a quite important seismic shift in the way that diplomacy is conducted. And I think that the third real change that we've seen in the last few years is the using of social media. Obviously, TikTok originated from China, but I think China's become, and again, I see this more as a bottom-up. Some people can say this is a top-down initiative, but I see this as a bottom-up initiative by Chinese people. A lot of them are manufacturers, for instance, to use social media, whether it's Xiaohongshu, Red Note, which again, you saw TikTok refugees go to, again, getting more exposure to China, or it's TikTok, to basically go direct to consumer in a kind of B2C fashion and say, this is what is actually happening in China. You know, you can get, again, the trend of dupes, but it goes beyond dupes where you can go direct to the Chinese manufacturer. It again shows a face to the Chinese people, and it allows them, I think, to change the narrative somewhat and show that they, again, are hardworking manufacturers that make high quality products. You know, made in China is no longer the stigma that it was when I was growing up, certainly in the 2000s, that China can produce high quality products at affordable prices. That is, I think, going to be an enduring image in social media of China. And that's been a very relatively recent occurrence.
Absolutely. And on top of all that, the young consumers, the ones that are gamers, per se, playing international games, many of those games are also created, published in China, or they are playing together with the Chinese gamers. I think there's a lot of stuff going on there for kids that are right now between 12 to 16 years old, there's a lot of connection. There's a lot of infatuation with this Asian culture in general. Back in the day, I don't know, in the 70s and the 80s, perhaps the Bruce Lee cult was still alive. And I know so many friends, for example, from India telling me that, oh my God, the first place growing up that I wanted to visit was Hong Kong. I said, my why Hong Kong? Because Bruce Lee was from Hong Kong. And that for me was the, that idol. So right now, and then there was a vacuum when it came to, Chinese culture being transmitted or being accepted to that same level around the world. There was a vacuum for a while. Right now, younger generation in general, globally, is very interested in the Asian cultures, be it Japan or be it Korea, the whole K-pop, but also China, the comics, the short TV series, right, that are about 45 seconds each. The games, all that, I believe, is really opening a little bit the door. And maybe we don't see it in business yet, but these guys are going to grow up in the next 10 years and they might have completely different understanding of the country, and also this cultural element might come through. So very interesting indeed. Alice, what about the specific advice to the business leaders who are right now sitting either in China or in the US or in Europe or in the rest of the world? And not only business leaders, but also maybe policymakers, investors. You work with a lot of investors. How to navigate this very complicated era of very heightened China-US tensions, tariffs, and complexities? What would you say they shall do?
So I think that there needs to be three main policy approaches, and again, I interface with this quite a bit because my clients are in the financial space. Some of them in hedge funds, some are in private equity, and some are in VC space. On the China strategy, I think it's two-part. One is there's going to be distinct advantages in the Chinese market, even though China is slowing down, in certain consumer goods as China continues the structural rebalancing. So whether it's, you're a European company looking into healthcare, elderly care, or even certain consumer goods, I think that there's still upside in China because of the way that demography is shaping, but also the way that the rebalancing is shaping towards more consumer-led growth. The second part of that China strategy, something that has come up in a lot of my discussions with sophisticated investors in China, is follow where the Chinese manufacturers are going, because these are extremely nimble, sophisticated business people who will try to recreate the China manufacturing playbook in other geographies as they attempt to obviate tariffs. So look to Chinese manufacturers' investments in other countries. I think Latin America is going to be an important one. If Mexico continues to get USMCA exemptions, Mexico will again be an important hub for Chinese manufacturers. That being said, you are going to have to keep in mind the risk of rules of origin. I'm a little bit skeptical that they have a committed rules of origin, that is, Washington is able to impose a committed rules of origin approach to countries. This is, as Brexit's showing, a very drawn out, difficult process that requires continued compliance on both ends. And then in terms of the second part of the investment strategy, I think you need to look at other countries outside of U.S. China. Europe looks particularly interesting because I think Europe, led by a Germany that has decided to get rid of the fiscal debt brake, or reduce it rather, and is now empowered to rapidly increase defense spending, could have really interesting opportunities for business development, because Europe is looking to again increase its strategic autonomy and find ways to reduce exposure not only just to China but to the US. So I think certain geographies will see distinct advantages because they have their own regime shift in their own fiscal spending and business environments. And I think that the third area is going to be more in the space of U.S. China, which is to say technological decoupling and the technological war will continue. And I think will actually become faster moving, as was the case for the trade war this time around, vis-a-vis or versus the first trade war and first tech war, because I think Trump's attention will very quickly pass towards technological competition, because it's an area which he, again, I think is sympathetic towards, and people in the NSC, Scott Bessent, Marco Rubio too, will push him in that direction, because ultimately these are the China hawks. I've always said Trump is the biggest dove in a house full of hawks. I think they will try to focus his mind away from tariffs and towards the instruments of technological sanctions. So I think you've got to be very careful as an investor having any exposure in technology that requires maybe Chinese inputs or requires US capital, for instance, on the cap table, because I think both countries will continue to heat up their technological rivalry and competition. That isn't to say that you can't find opportunities. I think you need to find domesticated opportunities within the technology stack rather than have any exposure to cross-border capital flows or even cross-border goods flows.
Yeah, well, it's a very challenging time. So right now, companies will really likely have to choose one side or the other primarily, and also localize other opportunities. We've seen that also across the board. Alice, and the final question, what is one topic that we should have covered today that we haven't yet? Anything at all that is counterintuitive, trend, or perhaps a surprise topic that doesn't have much attention placed on it yet?
Well, it's funny you asked this question, Ash, because I've been thinking about an op-ed that I want to write and publish, which is to call the Trump presidency Trump's tributary system. I think any history student of China will immediately see the parallels, whereby Trump is the emperor in an imperial court, as we saw in Chinese history, surrounded, dare I say, somewhat facetiously by eunuchs. And again, in a scholarly court system where he is the apex character. And at the same time, he wants other countries, rather than invading or colonizing, which was the Western model, he wants other countries to come and pay tribute, mainly by reducing tariffs and increasing purchases of American goods. So in a strange way, I would say my hot take of the relationship is that China is exhibiting more the pathologies and characteristics of the US, and the US exhibiting more of the characteristics of China. Insofar as China is somewhat better at market signaling now than in previous years, it is trying to defend free trade. And the US is taking somewhat of the opposite direction in a strange inversion of fates. But that is the nature of this chimerica US China relationship. I think anyone wanting to understand Trump, maybe study some Chinese history, because I see a lot of interesting parallels, would be my hot take, to end on a somewhat facetious note.
Well, this has been a phenomenal conversation, Alice. Thank you so much. Guys, we have gone through what are tariffs, what's actually going on the ground, how is it going to impact the world trade, but also we've spoken about how the world is actually changing today and what to expect. I am choosing to be optimistic. I think this is an exciting time. It's a trying time. It's not an easy time. But again, greatness can shine at times like this. And also, I do believe that we are so much better together, coming together, going and visiting China, going and visiting the US, traveling the world, connecting with people, building bridges. This shall probably be, for intellectuals, for business people, for global investors, something that we all personally can do in order to bring world in a time of crisis a bit closer together. And I do believe that together we always make it a bit more awesome. Alice, thank you so much for your time today. Guys, do follow Alice on LinkedIn and other platforms. They will be just below this video in the description. And do reach out to chat with her about geopolitics, China economy, and tariffs if you are into that stuff. Chat soon.
Thanks so much, Ashley.